Good day. Ira Epstein of Linn Associates with your financial market wrap-up for this Tuesday evening, and we are now at about 6:30 p.m. on September 15th, 2020. Now, tomorrow ends the two-day FOMC meeting, and we're going to get the Fed announcement at 1 o'clock, the press conference at 1:30. In the morning, we get a whole rash of market data, but the market is really going to focus on what the Fed says, what it doesn't say within the press conference. And I think one of the things the market's looking at is to see, is there going to be a shift where the Fed moves maybe to looking a little bit harder at longer term dated maturities to see what they're going to do with interest rates. We'll see where that all comes in. So far, there's no real inflation warnings. Today's New York Empire Index, phenomenal, just look great as can be. Retail sales, yeah, a little bit funky, but I didn't expect them to be good. The kids are back at school, and what does school mean? You're buying them a new pair of pants to sit at the kitchen table? I'm not sure what school dressing means. That doesn't mean there aren't students at colleges. They are, and they bought things. The problem is, as we all know, it's not the same, and that's what we're all waiting on. Now, today China also mentioned that it may begin releasing its vaccine for wide distribution to its population in November. Their equivalent of our CDC head made that statement today. You know, there is a race for bragging rights that everybody solved at first. We know Russia wants to give it to everybody there right now. China wants to give it to theirs. The bragging right game is going. The question is the safety level. All right, we're still at the point where we're getting acquisitions, we're getting people buying out other companies. That is still going on. Money is cheap. That's going to keep going. Apple came out today, said nothing about any new iPhones. So there are other products, okay, but I don't think it was the fanfare that they were expecting, and I don't think their expectations were high. Metals got up a little bit and gave it all up late in the day. So let's see where we're at on these charts. On the S&P for the week, and we'll be at midweek tomorrow, we're up about 2%, up 69 handles for the week. That's good action. When we take a look at what we've got here, as I explained, you've come down, and just saying this is a bottom, it could be. I mean, now it's got enough consolidation to do something out of here. But when it first fell and you're just chopping, I don't know. Eventually, now you're going to get the Fed out of the way. And markets, once you get something out of the way, I don't think the market's going to be overly worried about what the Bank of England does or the Bank of Japan on Thursday. We'll probably get our new Japanese Prime Minister approved tomorrow. These are all things that are expected. So I don't see anything in the way for that market. The pattern on the S&P is temporarily what? Well, if we take a look at today, the high was 34.09. This high was 34.14. I could argue, even though you might think you've got the higher lows, that the overall pattern is lower highs and higher lows. You are not trending. You've got to get over this 34.14 to prove that you're in an uptrend. But I'll leave these here because they're just the most recent lows. The legacy of the swing line is the lower highs. That's how I'm telling you to look at it. And the resistance is rather stiff here at the 18-day average of closes. But if you clear it after the Fed meeting, the market's looking at something else. So got to be watching all that. When we look at Bollinger Bands, we got down to the lower band, we've been to the upper band, in between it we just fell, and you haven't done anything since then. Okay. When I come and look at momentum, you've worked out of an oversold condition. That no longer exists. So, could the market be turning up here? It could. A close over 34.24 would certainly have me telling you you've now got higher lows, higher highs, and a close over that, and I'd be friendly. Is there anything here that could resume the bearishness? That's where the kicker is, because I don't see it. Even if you just failed and went through this low, you're right into the lower Bollinger Band and you'd be oversold. So it's easier for me to get bullish with the what-if scenario than bearish right here. The NASDAQ is worked out of also being oversold, or has it. Why not? But all you need is one of the numbers, let alone two of them under 30, and you're still in oversold territory. Here, I've left the legacy as it is, the lower highs. But you can see you're getting higher lows. I just wanted to show you that on the other chart. And the battleground I'm expecting is the 18-day average of closes. In the Dow, you got up to that number, and you got thrown back immediately. That's a pretty stiff area. I call that the line in the sand. And that line in the sand is the resistance point. If you can close over it, I get bullish. That's to be the bias up. But when the swing line is up with the higher lows, higher highs, and it can't close over it, the bias being down, the two completely wash each other. And I look at momentum, which isn't pointing up. It's just sort of drifting right here. In the Russell, it's the same as the Dow. You came back up, fought your battle at the 18-day average. You've said you don't want to keep going down, but you're not saying you want to go higher. That's how I'm reading the chart. And one of the things I've been pointing out is even during that break that we had in the stock indices, the VIX keeps falling. You know, VIX keeps falling, telling you something else in the market. People don't want this insurance. They're pretty convinced the market is going higher. So something to keep your eye on there. In the bond market, you're out of a trend, and I would expect that going into an FOMC announcement. Got a higher high, lower low, stuck right at the 18-day average, that line in the sand going nowhere. 10-year notes is friendlier than the bonds. You've had higher lows, higher highs. The market is hanging here at an overbought condition. I wouldn't be surprised if you're back at that 18-day average tomorrow, just waiting to see what the Fed says by 1 o'clock or so. You're already doing it if you look at some of the other instruments. In the dollar index, you've got the lower high, lower low pattern right here, but you refuse to close under the 18-day average. So it's keeping the bias up. You're not getting clean pictures. That's what's exactly happening right now. In the eurocurrency, the market established an uptrend and it's still holding on to it. Now, what you don't want to see is the market taking out this 118.43 level, because that would then give you what? Well, if we look at today's high, it was 119.24 back here, and this high was 119.41. So if you took out that 118.43, I would make an argument you got lower highs, lower lows under the 18-day average. Momentum would probably turn down. Maybe you can get down to the lower Bollinger Band. I use the word maybe because you'd be in oversold territory just like that. In the British pound, you're still in an oversold condition, not embedded, with a downtrend that bounced away from the Bollinger Band, and there's formidable support at 127.11 to 14, the 100-day average in the lower band. To negate this downtrend, you've got to get through this high right there, and the peak of that day was specifically a 130.42. So we'll see what that does. And again, you got the Bank of England announcement coming out Thursday morning for us. Why would you want to go into that? In the Bitcoin, I can make an argument, maybe you get to the 18-day average, but I'm not seeing a lot more than that right now. This is a labored rally. You're not getting momentum really turning up on it. The differential between November Brent and WTI crude, that's the lowest low we've had recently, 197. So the Brent is acting weaker than the WTI. Here's the chart of the Brent. You can see what the market's doing. It has not been able to get over the 40.95 level, but I don't care if it does. You've now got an embedded reading, I think. Take a look. Both numbers under 20. Both under 20. Both under 20. That's embedded. So until the red line closes over 20, I'm looking for the 100-day average to potentially be the sell spot for the pros. And I'd say they'll bail if the red line closes over 20, and they'll be looking for 38.09 if they can get anything to the downside going. Doesn't mean I'm right in this analysis, but it's what I see. November WTI, different. The market's oversold. It never did embed. It's just oversold, and it's fighting already at that 100-day average. The swing line turned up, but you're under the 18-day average, so the bias washes that part out. It's almost like you're getting a contra-trend rally like you saw in the Bitcoin. So you got to wait and see where that runs out. Gasoline's got a pattern of a lower low and a higher high. That's not a trend. It's oversold, getting a correction. And in the nat gas, still bearish. And we've already seen that Hurricane Sally's taking a sweep now, as slow as it is, it's moving further east. It appears that the all clear for New Orleans in terms of being hit by the hurricane, that's gone. That doesn't mean flooding can't happen, but the longer this storm takes to come abroad, to come on land, not abroad, to come on land, what's going to happen here is New Orleans gets more savior. It's Mississippi you got to be careful of. Alabama, those areas look like the new area that can get hit on this. You know, if you don't keep up with futures, what can I tell you? But if you do, the hardest thing to do in these markets is find information that comes out throughout the day. Unless you buy news services and pay for them, you don't get that. And then even when you do, most of it's not written by futures traders. You're getting analysis on, gee, here's what the market did in this way or that way. We have, at our firm, writers that are writing on everything from the weather as to how it affects energies, the grain markets, and so on, option strategies, spread strategies, and the strategies for out-and-out futures, covering all those markets you just saw. If you haven't seen our information, we'd like to show it to you. If you have in the past, maybe it's time you look at it again. All you need to do is give my staff a call. They'll be happy to set you up with it. You can go to our website under free offer. Take a look at it. It's information you won't see everywhere. It's information you're not getting on the website. It's information for futures traders. I'm Ira Epstein. You have a great day. I'll see you all tomorrow.